All right. So what do you guys see here in Chipotle? What do you see here? Anybody? And I am recording this for our discussion purposes. Jay Tano, do you mean hitting resistance? Okay. So first and foremost, not that it I don't see that, Jay Tano. We can look at that. I don't see that at all. Um, the first thing that really stands out to me, and it is not relevant to the current stock price or really for any potential trade setup that we're going to look at, but look at the big gap. Look at this big gap from a year ago, April. So almost 1 year ago. Okay? And then look at the lows we got down to on the Christmas Massacre. Almost to the penny on a $380 stock. Almost to the penny on this gap fill. Just another example of the power of the gap strategy. Okay? So I'm just pointing that out. I mean, that is just unbelievable, quite frankly. So that's the first thing that sticks out to me. Now, that's not really relevant so much for what we're looking at for today for an earnings play. What is relevant is, what's going on up here. Okay? That's what is relevant. Now, we had this high back in August around 530. We definitely traded right through that. Made a new high just a couple days ago. And now just over the last week or so, there's been a lot of consolidation. Okay? For sure, this thing has been into a very, very bullish pattern. And I'd say that there's some really decent support here. Really decent support around the 50-day moving average. Why do I say that? Because not only is the 50-day moving average right here, but you can see this whole area that traded here between November and mid-December is all right in that area with a lot of volume. This whole area was resistance and should now become support for the stock. Now, we'll measure that area versus what the expected move is. And I haven't looked at what the expected move is yet. But I'm going to guess that that expected move is going to correlate somewhere to that area. So we've got big support around 480-ish. Okay, resistance-wise, yeah, we have this high here, but I wouldn't necessarily say that that is decent resistance. It's a high point, but that was a new high. It's not like it hit this 530 again and really bounced down off of that. All right, so let's take a look here. Stock is trading 525 essentially. What's that expected move? Anyone? Okay, Dave, you say 38. It's close. I think it's a little bit less than that because we're really trading, if we look at it, we're trading 523.5. So if we look at either the 525 straddle or the 522.5 straddle, but then subtract out $1.50 of intrinsic value, that really brings us down to about 36.5 or so. Does everybody see that? Okay, so let's get this up on the board here. Today is the, what is today? Today is the 6th. So we figured an expected move of about 36.5. So if we now measure the expected range, well, again, no coincidence. The expected range off of this is 487 up to 560. Well, as we were just evaluating on the charts here, where is all that support? All that support is right here, around 482, 483. So the fact that that expected move to the downside comes right into that range, that's a lot of support there. Okay, so let's look at an iron condor. An iron condor right around that 480, 5-ish level or so. Let's look at the 490, 480. And then on the upside, with an expected range up to 560, let's look at the 555, 565. Okay. So the 490, 480, and 555, 565 iron condor is trading about $4.50. We'd love to see it closer to $5, but okay, let's see where we are on this in terms of a break even. So the break evens become 485.50, which is right in our wheelhouse. Break even on the upside is 559.5. So we're really right there compared to the expected move. Break even to the expected move. Do we want to do this at 450? Yeah, it's a little shy, obviously, from our 1-to-1 that we look at. But I'd certainly consider this if we could get a little bit more than 450. Now, looking at the expected range, the break even, and then the chart that we looked at, knowing that there was some really, really big support in this area here, and maybe not a touch, maybe not so much resistance up here, I actually wouldn't mind looking at an iron condor, but slightly skewing this to the upside, giving us a little less protection to the downside because there's all that support, but a little bit more room to the upside. In fact, by doing that, now I don't know if we could trade on these levels here, but by doing that, we just got to potentially, at least it's a midpoint, let's say $5. So what this one is, this is the 500, 490, and 560, 570 iron condor for $5. So now the break even's going to be $4.95 up to $5.65. We know we intentionally did this to skew this so that we would have a little bit more protection on the upside. So it took the little bit of protection from the downside, added it to the upside, got us to that $5 credit, or that 1-to-1. Okay? Without looking at a potential direction here, I love that iron condor. Now, do I want to do it right now? No. Because just like when we were evaluating Amazon and Google, this $500, $600 stock can certainly change in a matter of moments. So to me, this is something that is absolutely on the watch list to trade today if we can get these levels. But I don't want to put it on just yet because I want to see where the stock is at 10 o'clock, at 11 o'clock, and get a better starting point. All right? Everybody understand that? Everybody understand the strategy behind that? Okay, awesome. All right, let me post this up here. Let me get the video, everything up here. And then, guys, we have a couple fly-in students here, so I'm going to be working with them just for a few minutes. I will be in the room. You'll see me clicking around, but I'm going to be working with them. And then I will be back with you guys.